Hello, this is Andrew McNair from Swan Capital with our August 2013 Economic Update. In this month's video, we're going to discuss some of the factors that drove markets in August and what you can expect in the days and even weeks ahead. Now, as always, please be sure to review the following disclosure statements after this video. Now, as you know, August was a rough month for the stock market, with volatility and concerns about the Federal Reserve causing the largest drop in the S&P 500 since May 2012. For the month, the S&P 500 lost 3.1%, the Dow 4.5%, and the Nasdaq nearly 1%. And this was all fueled by concerns about the Federal Reserve and an end to quantitative easing, which drove a lot of action last month. See, the Fed has been propping up the U.S. economy with many billions of dollars in bond purchasing every month. And now that the economy is doing better, the Fed is considering tapering back its monthly bond purchasing, which makes investors scared that they're taking away this potential support. And, you know, we've had positive economic reports of late, but it doesn't matter. Investors are still worried about what will happen once they pull the crutch out from under the economy. Now, while no official decision has been made on its tapering, a number of Fed officials have stated that the Fed may start cutting back as early as September if the data shows that the economy is on solid footing. Now, economically speaking, the U.S. shows great signs to be on solid footing. In July, the headline unemployment rate reached a low of 7.4%, and economists expect that August job report to show further improvement. And even better news, the second estimate of second quarter GDP showed that the economy grew faster than expected. And this was mostly fueled by increased exports to other countries. Now, on the other hand, here domestically, mortgage rates are up, which may act as a brake on the housing market. Now, consumer confidence dropped slightly in August from the 6-month high it reached in July. And this was largely due to the concerns about the higher mortgage rates. Now, as we approach the end of August, you know about the Middle East tensions, and they're continuing to ratchet up. And the Obama administration is considering military intervention in Syria after the chemical weapons were used against civilians. While we don't know when or how the U.S. military will take action, the possible repercussions on oil prices and defense spending contributed to the volatility last week. And this is a developing situation, so we're unsure of how it will really shake out. But we will be sure to keep you abreast of what's going on, especially when we do our next update next month. Now, looking ahead at September, we expect to see continued volatility to dominate markets. While it's disappointing to end August on a low note, it's not unexpected to see a retreat from market highs that we've seen in previous months. Now, if the economic data continues to show that the U.S. economy is doing well, we can expect to see tapering soon on the quantitative easing. While tapering may stroke further volatility, we want to remind you that opportunities can be found in changing market conditions like these. And we have found the knowledge in helping to find these opportunities for our clients. And we'll continue to monitor and monitor the economic and market situation to keep you informed. And I want to share with you some upcoming events we have here at Swan Capital. We have our October Social Securities class coming up at UWF, so you want to get signed up for that as soon as possible. We also have our next radio show coming up next Saturday on the good, the bad, and the ugly of annuities, so don't miss it. Now, once again, this is Andrew McNair with Swan Capital, signing off for this month of August 2013. Now, I hope you found this commentary interesting and informative, and we'd love to hear from you. So drop us a comment in the comment section below. And if you have any questions about what you've heard in this update, give our office a call at 850-380-9558. That's 850-380-9558.